Hello traders and welcome to a new video on BTC MOVE contracts and how they can act like options. Before we get into the video, my Delta Neutral course is still on my site right now. So if you want to learn more about how to get passive income from Delta Neutral trading and try out a completely different type of trading than what you've probably done before, then you can check out the link in the description below. With that, let's get started. Hello traders, I was looking through the comments on the last video I made exactly 1 week ago on BTC MOVE contracts, and I found that a lot of the comments were saying that there were some issues with that video. So what I did was I went back in that video, I rewatched it, and I found that there were some things that I thought were not perfect. So as a result, to make sure that every video that I put out is top-notch information, I love hearing from you guys. And when some of you guys say, you know, like, hey, that information's not the greatest, or when you said this, that's not exactly true, that's when I step in. I either delete the video and create a new one, or I just delete the video, or I just edit the video. And that's what we're doing today. That video 1 week ago deleted because I don't think that it's the best I can do. And today we're going to do another BTC MOVE contract video that I think is going to be far more helpful. Today's video is going to be on BTC MOVE contracts and options. Don't get scared if you don't know options. This is not something you have to be, terrified of. A lot of people can get really scared whenever you say in finance, whenever you say options, it's like, oh, that's the toughest part of, trading, or one of the tougher parts. But don't be scared, because I'll hold your hand through this virtually, because 6 feet distance. So first, BTC MOVE contract, and what are these? Because I want to explain this, because I don't think I did the greatest job of doing that before. Let's isolate a few factors that we care about and talk about those. Strike price is the price that this BTC MOVE contract starts at, and that is always going to be compared to the index price. Index price is just the average Bitcoin price across multiple exchanges. Now, the predicted expiration price is just the difference between the strike price and the index price. Okay? Now, the mark price is what the contract's actually being traded at. So you will almost always see that the mark price is going to be greater than the predicted expiration price. The reason this happens is because of future price movement. If this was actually being traded at like 353.7, it wouldn't be that hard to profit. I mean, there are still things that could happen, but that it would be not very efficient. Too many people would be buying it. So you can see that that is trading above the predicted expiration price. Now, what does this mean really in essence? Well, let's do a fun little example. Let's say you watching this video, you buy this at 626. What does that mean? Well, if we buy this at 626, you need to know two calculations for sure, okay? This is not mandatory. This is like, you got to know this. So we need to do 9314.1 plus 626. Why? Well, we know that the strike is 9314.1. Yep. And we know that the mark, the price that we bought at, was 626. So we need to find something called our upper break even and our lower break even. Our upper break even is 9940.1. What that means is that if we buy a contract, we need price to be higher than 9940.1 at expiration. Or we also have a lower break even, and both can make us profit. Or we need price to be below 8688.1. If either of these things happen, we make money. And if we get one contract, we make $1 for each tick that the mark price goes beyond. So let's say that the contract expires at 8588.1. We would make a $100 profit. Okay? If we owned one BTC, if we shorted one BTC MOVE contract and the price expired at 8588.1, we would make about $100. Let's say we short these contracts. What does that mean? Well, when you short the contract, instead of wanting price to go above upper break even or below lower break even, what you want is for price to be between the lower break even and the upper break even. And if it stays in that range, you make money. Okay? That's what a BTC MOVE contract is, and that's how you can calculate the bounds on Bitcoin. So saying, hey, if price is below here or above here, because I shorted a BTC MOVE contract, I profit. This in options, don't get scared yet, or don't get scared. This in options is also called a straddle. So a short straddle is when you're betting on price not really moving much, and a long straddle is when you're betting on price moving a ton. And it involves the same strike price. So it's okay if that doesn't all make sense, because this video, you need to know just a tiny bit of options, but it's nothing that's, you know, gonna make you run away crying. At least I hope not. Okay, moving on. Let's go to the options play here. What do I have here, and really why? Well, this is an infographic for what I want to show in that move contract. I don't want to just, you know, put a horizontal line on TradingView here and here and have that be that. I want something better. So what I actually found a way was I found a way how to code in the BTC move contracts onto this page through a kind of a weird roundabout way. I know that these BTC move contracts are similar, not exactly the same, but they're similar to straddles. So what I did was I made the strike price, the same strike price, boom. I did that. And then I set the current Bitcoin price to 10,000. This will make sense soon. I know its current price is not 10,000, but this will make sense soon. And then I put the option price to 0.031, 0.031. Well, why did I do these three things? You know, this probably all makes sense because, you know, short straddle similar to selling a move contract. Because really what I'm trying to do is model what it would be like if we sold a BTC move contract at the price of 620. The reason I say 620 is if you sold at 620, that would be equivalent to 0.031 of 10,000 plus 0.031 of 10,000. Okay? You know, if I put this at 0.062 and this at 0.062, this would not be correct at all, because your lower break even is not 8,300 and your upper break even is not 10,600. That's pretty insane. I wish, you know, if we could have that. But it's actually, in reality, if you were to short a BTC move contract right now at this very second, you would have these two break evens, okay? And you might be wondering, well, how can I make sure that this is 100% correct? This is saying that my my current break even price is between 99.25 and 99.50. Well, there's a really simple way to check that. So we know that 620 is the price that we had shorted the BTC move contract at, right? Okay. So we need to do 93.14. 93.14.1 plus 620 is 99.34. So this is correct. You can see it's, you know, between the two. 99.34 is between the two. So really, on this roundabout way, all I'm trying to say is if you ever want to physically model a BTC move contract in kind of this roundabout way, you do it like this. So if you sold the BTC move contract, you put these both to sell. If you bought the BTC move contract, you just put these both to buy. Strike price is the same. Put the current Bitcoin price at 10,000 and then cut the option price in half and then do it like that. So if you bought this, if you sold the option for, let's say, just a price of 1,000, then this would say 0.05, because 0.05 times 10,000 is 500. 0.05 10 times 10,000 is 500. You know, 500 plus 500, 1,000. All right, so now for the option part, very fun. Here's the issue with selling BTC move contracts. If you're short one, we need by Friday at midnight UTC. I need price to be between these two bounds. It's as simple as that. But let's say that there's a problem with that. Well, the problem being that, guess what, guys? Everything's set up. Everything looks good. Look, we just shorted a BTC move contract at the price of 620. Awesome. But then let's say price goes to 10.3K. You just lost 366 bucks if you were to short one BTC move contract. Do you want to lose 366 bucks? I don't think you do. So to avoid that, what I've done is I've found a way to mitigate your risk, your tail risk, as it's called, if price was to go beyond the bounds. And I'm going to show you guys that. The reason why I want to protect against an upside movement when I short a BTC move contract is I think that it wouldn't be crazy. It could happen. I don't think it's very likely, but it could happen that price does go above the 10K. There's a lot of buildup here, and this buildup might materialize before Friday, and we could get a burst of volatility. So if we're worried about that, but we still want to profit from price being around here, this is what you need to do. We can buy a $10,000 strike price call. So what that does is we know, let me put that guy on with the option price of 0.011. Look at that. Don't look at that. Look at this. What just happened? Well, we know that we still have that break-even portion, that kind of triangle where if price doesn't do anything and we sell a BTC Move contract, we make money. You know, and the closer the price is to 93.14.1, our strike price, the more money we make because we shorted the BTC Move contract. Now, if Bitcoin goes up, our loss is now limited because we bought a call option, right? Now, if you want to find, well, what are the current prices of the $10,000 call options on the most popular option marketplace that I think there is, Deribit. I'm never going to be able to pronounce it right. I'm very sorry. So the current price that we could buy a call, let's just do mid-market price, is about between 125 and 145. Let's just call that 135. Yep, that's in between. So if we were to do that, perfect. So if we were to buy a call, our loss would be limited to $200, right? We would not be losing any more than 200. Now, if price is below 9,800, we still make, we make money. Awesome, we make money. And if price is above 88.50 by the looks of it, around here, 88, somewhere between 8,800 and 8,850, we make money. So what are the pros and cons of doing something like this, known as a protective play on our sold BTC Move contract? The pros are that you're hedged against really any crazy thing that happens to the upside. And that can be nice. We're not going to lose a lot of money if Bitcoin was to go up much, much higher. Another pro is that if we're wrong, we still make money. If price does absolutely nothing and we're wrong, we can still make money. Now, there are a few cons with this. One con that might seem apparent, might not, is that your break-evens get a little bit worse, meaning your lower break-even and your upper break-even get a little bit worse. So our break-evens are between 9,800, around 9,800 and 8,850, whereas before, with an unhedged strategy, it was around 8,700 to 9,934 or somewhere around there. So your break-even does get a little bit worse, as you can see there. And another con is that you still would lose money. If price was to break out to the upside, you just wouldn't lose as much. So if you say, well, this doesn't really do it for me, let's go look at the 97.50 calls, you can do that as well. So for a 97.50 call on the 22nd of May, remember, I have to pick the same expiration price of the BTC Move contract that is the option. They have to have the same expiry. Now, if I do a 97.50, I can get that guy for about 0.0225. Yeah. 97.50, 0.0225. So let's say I do a 97.50, 0.0225. Perfect. Okay. So this one actually looks different. This is giving you a different risk profile. This is so interesting. Look at this. So the other one had a steeper loss, but it actually looks like the 97.50 bought call at 225 isn't terrible. Your max loss is $41 if you were to buy one call at 97.50 and then also just sell one BTC Move contract at a price of 620. Then this doesn't look terrible. But let's investigate a little bit more. Well, your lower break even went a little bit higher, which is unfortunate because we shorted this, and looks like your upper break even is not great. But as a result, your max loss isn't terrible. As you can see, it's really not that bad. So as long as price is below 9,700 or 97, like what would it be, like 97.10, 97.20, you're going to make money, as you can see. So these are a few ways that you can mitigate against an upside risk. We can also mitigate against downside risk by buying a put. Now, a put means we believe that the market goes down. Buying a call means we believe that the market goes up. Now, whenever we use a BTC Move option, a BTC Move play, we can actually hedge these with calls and puts, just like I'm showing you today. So if I want to look at a put, I would have to buy a put around my lower break even, or a put lower, or just basically a put around my break even. Puts are here. So let's say that I do let's find out what the lower break even is just by itself. Lower break even is around 87.50. So let's just do a 9,000, or I'll just do 9,000. We were to buy a put at about 0.008. for the 9,000. So let me get that guy set up here. 9,000.008 and load you up. Did I do that right? Because this looks a little too profitable. 9,000. I don't think that's right. If so, then yeah, that is right. 0.008, a 9,000 put. Yeah, that's right. Well, that's not terrible. So yeah, that is correct. Actually, I was thinking, can that be correct? What this is basically saying is that as long as you are below the price of 98.50, you make money, which is nice. So if you, how do we do this play? You know, you might be saying, oh, how on earth do I do this play? Well, if you have an account on Deribit and FTX, what you can do is FTX, we short the option. I mean, we short the BTC MOVE contract. Let's say at a price of 620, which is, you know, oh, the price actually went up. You'd actually be shorting at a better price. You could short it at around, let's say, 630. So 630 would be 0.0315. You could short this at 630, and then if you wanted to protect yourself against any downside Bitcoin movement, you would also buy a put at a strike price around the lower break even. And if you want to protect yourself against any upside movement, then you could buy a call. Now, if we do both, watch what happens. You get this. This is what I was building up to, but this is basically, what does this say? Anything between $9,000 or anything below 9,000 is profitable, or break even because 10 fees. Anything below like 96.50 is profitable, but it's probably not best to double hedge yourself. I mean, you could, but by that point, I would just be using options by himself and not trying to do BTC MOVE contracts with options. What this video is showing is that there are so many ways, if you put the time in and you really watch this video and go beyond the video and start to look at how this works, how options work, how options and BTC MOVE contracts are similar and how they're a bit different, and how you can use them in tandem, which is the most important, to make money in a large probability of scenarios, in a large amount of scenarios with good probability, while not even just having great probability of making money, but also protecting yourself against any crazy Bitcoin movement. If you can do all this, I mean, that's the ingredients of a very, very successful trader. That I'd put my money in that guy. If that guy did all that, I'd be like, oh, take my money, my friend. Take my money. But yeah, so it looks like right here, anything below 98.50 is profit, just because of the great put price that we can buy at the 9,000. But because I'm ever curious, and this video is going to be very long, let's go look at the 87.50, buying it at 0.0055, buying it at put. Okay, I don't think this is going to be probably not good. 0.055, right? 0.0055 or 0.0, how many zeros? 87.50, 2 zeros, Bennett, 2 zeros. Oh, we're at the talking to myself part of the hour, I guess. So we can see that this risk profile basically is saying anything below anything below about 98.80, 98.90 is profit, right? So there are a lot of different things that you can do with call and put options and combining them with BTC MOVE contracts. Now, that is one thing that you can do if you want to hedge yourself when you sell a BTC MOVE contract and you're trying to bet on low volatility. There are also things I think you could do. Like, let's say that instead you buy a BTC MOVE contract and you want, you buy a BTC MOVE contract and you need price to either be above there or below there by Friday or by, whatever time you want it to be. Well, there are also options that you could add into this play to make your risk profile better, or to just even give you a better probability that you make money. And that's what I think a lot of these things do. A lot of these options plays do when you combine them with BTC MOVE contracts. They just give you more possibilities of profit. But I must say, those profits tend to go down a little bit. But that's a result of hedging yourself and also having more avenues of profit. You're probably going to have less profit in any single scenario. But I prefer to take less money and to have more possibility of profiting than to risk for more money and have less of a probability of profit. So that's just me. That's just my kind of risk profile. I want slow accumulation of BTC and USD. I'm not trying to because this typically ends like this. That's what I've learned in my 10 years of trading. So yeah, this video is already very long, so I don't know if I can cover what you could do with BTC options on a bought BTC move contract in order to hedge yourself or allow yourself to give more avenues of profit. But if you guys come out in the comments and say, hey, oh my God, this video helped so much, please talk more about how we can do this in the reverse, how we can buy BTC move contracts and then hedge them with options plays. With that, it's been a long video. It's been a fun video. I hope this makes sense, and if any of it doesn't, last week's comments were sometimes hard to read for me, but they were helpful because they told me where I went wrong. So everything that I showed you guys today, I've prepared, I've done this before, so I know that it works. The calculations to me, I've checked them, but if anything is wrong, please just message me and we'll work it out. All right, with that, happy trading. And go take a look at Move Options and Move contracts and options. There you go. Happy trading.